Good afternoon, and thank you for joining us today for the Digital Supply Chain Networks in Uncertain Times webinar hosted by R3. My name is Henry, and I'll be the moderator for today's panel discussion. Before we kick off, it's my privilege to introduce my esteemed panelists, David Koh, Managing Director at HSBC, Derek Lau, Director at ING, and Tony Murphy, Vice President at MasterCard. Thank you, gentlemen, for joining today's webinar. Before we dive into the questions, I'd like to provide a brief introduction to the topic and really set the context for today's session. First and foremost, the current global pandemic is a humanitarian challenge affecting hundreds of thousands of people. It is also an economic issue, a working capital issue, and a supply chain issue, exposing many vulnerabilities in today's supply chains. So this webinar is focused on really the short-term working capital and supply chain challenges corporates are facing today, and the role of technology companies and banks in responding to the global pandemic. To give a sense of how far-reaching the impact is, I wanted to mention a statistic. CNBC did a survey across 2,000 CEOs in over 110 countries and found that over 80% were expecting declines in revenue over the next 6 months. And that was for a few reasons. One was really there was a reduction in consumer confidence and consumption. There's lower workforce productivity. And because of these supply chain disruptions, it's really having a significant impact to corporates, prompting both public and private sector to take action on several fronts. Here in Singapore, the Ministry of Trade and Industry announced a slew of measures to help really stabilize and help corporates. Local trade associations and industry bodies are also helping and playing a role, providing subsidies and credits to help everything from retraining staff to adopting new digital trade solutions. And obviously, corporates are implementing health and safety protocols to ensure the safety of their employees and their customers. When we follow the news, every actor is playing a role, and it's become quite transparent in terms of how interconnected trade is today. If a part of the supply chain breaks, even a small part, it has the potential to disrupt entire supply chains. Companies cannot succeed in isolation. And the overwhelming sense that we have is that we're really all in this together. We all have a part to play. And so it's with that context, this webinar is really focused on 3 key themes. First, how well prepared are companies today to respond to global pandemics? 2, what is the role for banks and technology companies to help companies weather the storm? And what are the levers available to keep companies going or to kickstart a path to recovery? And finally, what type of technologies can be used, such as blockchain, in future-proofing and building more resilient digital supply chain networks? So without further ado, with that context, let's get started.
Well, first and foremost, follow the rules around social distancing. And how do we find a way to operate? I think in terms of talk about the levers, it's an element of just being able to operate. I think, just to help bring things back into an order where shops can open and normal life can resume. I think that's going to be paramount, and what can we do together to make that happen, right? I think the levers that are available to companies, talking to a lot of the different financial institutions out there, there are, like HSBC, we're talking about, what can we do to help our customers, clear the cargo faster, helping them make sure that they remain liquid through a really tough period of time. I guess, in that sense, from a trade facilitation and technology companies' perspective as well, this is the time to really deploy, look at technologies that are available. A lot of have tested these systems. We know it's working. I know that we've partnered with R3 Corda as well for blockchain technology, handling everything end to end in a digital environment. These are the things that would enable social distancing, and I think this is the time where if there are companies that have doubts about whether or not they should do these, this is the time to really look at that. I think that's one of the biggest enablers that we should be looking at as a system.
Those good points. We've seen a lot of banks. I mean, obviously helping on the financing and worker capital side, but taking a bigger push to digitize a lot of their processes. So actually, just earlier this month, I believe, some of the banks were advertising contact-free trade finance processing, partly because a lot of the document couriers aren't even available to ship or pass documents to banks in the case of documentary trade. And also because corporates are moving from branches to digital and self-service channels. So definitely see or agree with a lot of the points that you made and the push for technology. But maybe Tony, if you had any thoughts from your side on this as well, good to get your perspective.
Yeah, I think we've Mastercard has conducted a number of surveys over the last couple of weeks with SMEs in different countries, and I think there are really what stands out is really three key areas. The first is the ability for an organization, an SME, to turn a service into an invoice, get an invoice into some kind of shape of receivable, and then finally get cash in hand. And that's really a major issue right now in terms of how asset conversion is going to happen. And I think this is where working with banks, working with payment providers like MasterCard and the underlying technologies that R3 and its partners brings is going to be extremely important to facilitate that. So I do see a major push in the whole area around digitization, primarily dealing with the ability to drive the whole invoice to cash process and making that as efficient as possible. But it is interesting, and there's a bit of a paradox as well, that one of the other themes that we see coming through, and that was a very interesting article this morning, I think in the Business Times, is that the whole situation right now that we're in has lent itself to fraudsters getting into the market, all kinds of financial scams starting to appear. And so for the banks, and certainly for us as well, the whole focus on fraud management is kind of making us look at the digitization effort and perhaps having to look at scrutinizing information that's coming through the supply chain, whether it's an invoice that's being double spent presented, whether it's genuinely SMEs looking to survive and trying to get short-term loans and basically having to stack those loans. And you can't blame them for wanting to do that, but of course that creates issues for the lenders. And so conversely, we've had to focus on scrutiny as the applications are coming through the system. So I think our ability right now to leverage fraud management capabilities, coupled obviously with data and cybersecurity, these are absolutely paramount right now. I think the third part of this is really how payments are getting done right now. And it's interesting in the US, which has been predominantly, a check-based, payment scheme for many, many years. There is a tremendous push toward digital payment schemes, whether it's using things like, virtual cards, whether it's using, blockchain-based cryptocurrencies. But there's a push now because of the whether it's people having to distance themselves, isolation, people working from home, making transactions through e-commerce, doing whatever trading they do today at home, and conducting the normal office business from the home location. And so digital payments is going to become a very, very much an important part of that exercise in terms of how you trigger a payment, how you can get the right kind of velocity and visibility across that payment, how efficient it is. And of course that drives the whole cash management aspect of that. Can we help the SMEs receive funds quickly? Can we help them turn those funds around in terms of refueling their supply chains, and just helping overall liquidity and working capital needs? So I think those three elements coming together, the ability to drive, invoice to cash, managing the fraud aspects of this, and driving more digital payments. I think these are the three outstanding elements right now where technology is playing a major role in supporting this activity.
If I may add, just because I think Tony touches on some really good points about some of the agility in the system as well, because I think what's happening in the market, different companies in different sectors have been impacted differently, and a lot of it is driven by the rather specific needs and demands of the world right now. I think late last week we saw Ford Motor Company in the US talking about retooling their factory from making cars to ventilators. We also saw last week LVMH, switching a perfume factory into hand sanitizer factory. Now these are things that are actually fundamentally quite different. I think you think about the value chain between making a car and making ventilators. How do they quickly adopt these things? And then comes back to what Tony has touched on, the things that we need to consider when we try to be as agile as possible and supportive as possible. I think a lot of these things, again, the fundamentals are such that digital solutions are there, the ability to act quickly are there to support companies that are looking to shift. And I think so. Coming back to the question around levers, some of the things in certain sectors, I mean, the cry out for more working capital to retool, to expand capacity is definitely there. And how do we just sort of build that out into the wider ecosystem, make sure everybody can have a role to play? That's critical as well.
Good points. Yeah. So clearly a role for trade facilitators and technologies is great points. I wanted to move to the next question, more on the working capital side from the corporate treasurer's point of view. So clearly, with the disruptions, not just on the supply side, but on the demand side, it'd be great to get a sense of what challenges is facing for corporates, and maybe I can pass it to David first to just what you're hearing from corporates. What are the type of challenges they're having on the working capital side?
I think a lot of this again comes back down to which sector they're in. There are quite a lot of companies that are looking for more support, and we're obviously very happy to see how we can step up and help them, than ever. But of course, unfortunately, there are areas in which businesses have been quite badly hit, and this whole, the more people have to stay at home and consume less. Again, we see all the economic data that's out there. How can we help make sure that the companies have what they need in terms of liquidity to stay afloat? I think for us, that risk awareness in terms of from a credit perspective, from a counterparty system integrity, that's where again, I move into a new paradigm where elements around how well buffered is the system really, in terms of overall liquidity. And I guess then as trade facilitators, how do we make sure that there aren't pockets of money trapped in areas unnecessarily? And then how do we deploy technology to help these corporate treasurers manage these risks and access to the liquidity much better? So, minimize borrowing where they can, optimize cash where they can. I think a lot of these things are critical. The key thing as well, where a lot of the trade flows and from value chain perspective are truly international. There's still a role here to be played. Again, as representing a bank here, make sure you leverage the banks that you work with to reach out to your entire value chain from supply side to the sell side. I'm sure a lot of people, from one sector to the next will be experiencing the same thing that you and your company are. So how do we make sure that everybody is there pulling together to work together. Certainly leverage the strength of international banks that can reach out, further and faster, and coupled with technology. Then, right? Just talk about how we can see pockets of working capital across the entire value chain, not just within the company. How can we find ways to free this up? Monetize on these inventory, raw materials, otherwise, and help you manage and optimize your cash and working
capital. Yeah, that's a good point, because I think and technology does have a clear role there. We speak with some corporates, and actually it's just a challenge to know what their global cash position is for cash, because they have so many subsidiaries, so many accounts, so many banking relationships. Many companies today are very much focused on sort of survival, but for those that are trying to plan ahead, a lot of them are looking at digitizing more around getting better visibility on their cash positions across different currencies, geographies, banking relationships. And where we see, interestingly, a role for blockchain is a lot of, particularly on the corporate treasury side, we've started to see a lot of technology companies looking at enabling that visibility for corporates to be able to manage their liquidity across different subsidiaries and be able to standardize the way they connect with not just their banking partners, but also, even just internally. That's a challenge sometimes. And so using blockchain as a way to have some type of common identity, standard protocols to integrate with different parties in that value chain is something that we see where blockchain could help. So that's quite interesting. But Tony, just curious to hear your thoughts as well.
Let's kind of get some perspective. I think entire supply chains today have been decimated to the extent that when this is all over, we're going to see emerging very, very different patterns of behavior. The way that we're going to reconnect supply chains is going to be very different. We do a lot of work in verticals in MasterCard, and one of the verticals David was sharing just now was automotive. Before the COVID issue in Wuhan, in China in general, almost 40% of automotive suppliers in China had a liquidity issue. Many of them facing tremendous problems with short-term financing, creating all kinds of issues in terms of getting product into the channel. Now, can you imagine what the situation is right now? Entire production lines have shut down. How do we get these small suppliers refueled and working again? Is it indeed possible to do that? And I think one of the major shifts that we're going to see post COVID-19 is that you're going to find that the bank, the financial institution, is going to be right at the center of this new emerging supply chain. They're going to be the ones that are going to really drive the working capital needs of all partners within those various ecosystems. Traditionally, financial services has been on the periphery of supply chain. I've been a practitioner in supply chain in various forms for over 30 years. And the physical supply chain has been very distinct from the financial supply chain. It's not for lack of the information. We've automated physical supply chains. We've got data flowing across the entire ecosystem, whether it's demand forecasts, whether it's JIT, ASNs, shipping notifications, invoices. All of this is electronic data that can drive the needs for financing, understanding behaviors, managing the smaller ecosystem players like the SMEs to participate. But we've not harvested that. We've not harnessed that information in the past. And I think now the banks really are stepping forward together with the technology partners. And like us in MasterCard, we're very much a technology partner in this space, supporting the banks to be front and center in driving the aggregation of information and building the right kind of models that are really going to be, influencing and driving the physical and financial supply chain for years to come. So I think we're seeing a seismic shift. I think it's taken this existential, although it's a major issue, but it has been a catalyst to drive this. And I'm certainly seeing that with a lot of our key corporates as they start looking at the supply chain and start saying, okay, well, how are we going to recapitalize? We're looking at major players in FMCG making announcements, for example, of how they're going to redistribute, and provide funding to their smaller SME suppliers. There's a lot of this happening, as we talk now. So the banks will play a major role in gearing up to make that possible, to build the new channels between the principals and their distributors and their smaller retailers and suppliers. So this is really going to be a seismic shift, and it's going to rewrite the whole theory of how we manage supply chains. But I do see this as a major opportunity. I think the banks are certainly focused on it. I'm looking forward to seeing over the next few weeks and months how we start to play through with a lot of the government-led schemes that we're looking to implement, and the role that the banks will play, and obviously providers like MasterCard will play. So I think that's going to be something that's going to be quite pivotal, and sets a really a new precedent for how we're going to manage working capital across the entire supply chain. And perhaps realize for the first time that harvesting information, bringing the ecosystem together, better visibility, better velocity in terms of information flow, and better decision making is really going to make this work.
That's interesting perspectives there. I guess it's a good segue into the last question. I think we talked about it quite a lot already, so I'm gonna change it slightly. I just wanted to ask, still focused on technology, but there's quite a lot of technology companies that are joined us today. I guess for those that are thinking about what role they can play, what solutions you think the market needs, to help. What any thoughts on for those that are interested in playing a role and creating relevant solutions today, given the context, any advice you give to the technology companies in the webinar. So maybe David, I don't know if you had initial thoughts on that.
Yeah, I think for me, it's always about coming to a standard that people can abide and learn to work with. I think to a certain degree, APIs have been quite the godsend, helping us, come up with systems agnostic platforms where, a lot of corporate customers want a solution where they just have to sign up to one system and not have to adapt, their needs to multiple systems across financial ecosystem. Banks have certainly been quite, how should I say, intent in the past to say, hey, look, this is my electronic banking platform, and this is the one that's best. Please use us. And instances where we're seeing companies then having had to, deploy multiple bank systems. Even as we've got new financial technology coming into our financial ecosystem, the key is just coming to the right standards. I think for me, elements around smart contracts, elements around the terms of reference would be really, really useful, adopted across multiple markets. So the ease with which people can trade deploying technology will be critical. Again, just want to add that there are multiple systems out there that HSBC has been party to. It's all been tried and tested. We know these things can work. I think there are times where we've had customers who've shown an interest in one particular technology, but they can't get the entire ecosystem of their value chain to buy into it. How can we sort of, create a sense of urgency, bring a lot of that together now in this new environment? Because I really like the second part of this question, right? You see this as a catalyst for change. I mean, what's happening around the world right now? If this is not a catalyst for change, I don't know honestly what will be.
Agree.
It's one, how do we help customers rethink, their approach to these things, even as we are speaking very actively with a lot of our customers. Unfortunately, there are instances where customers just say, "Hey, look, I got no time for this. I'm just trying to deal with, what's at hand and what we got to do." But I'm hoping that along the way, as we're approaching a new normal, more attention will be paid to see how we can reconfigure and reset how we trade ever more seamlessly across the world. I mean, we see all sorts of different risks emerging out of this. You see the volatility in exchange rates are catching some customers out. But broadly, the closer we bring a lot of things together, people can trade quicker, seamlessly, settle faster, greater visibility to where their cash and manage it effectively. But some of these take time. I like to just call out the fact that from an HSBC perspective, as we're sort of facing into this initially and thinking about how best we can help our customers, sometimes just going back to tried and true simple plug and play systems, whether it's just a quick host to host, plugging in our electronic banking platform, just handle payments more efficiently, just tailoring around social distancing requirements these days, right? Make sure there's less physical handling and transmission of physical documents. These are things that have been looked at as well, and just we are definitely geared up to help our customers that way. And again, just broadly making sure that there's enough working capital out there for our customers that need.
Okay, thanks, David. And so I guess Tony, same question for you, but maybe more specifically, what role can not just technology but blockchain play in potentially providing relevant solutions given today's context? And I can contribute one. Maybe it's worthwhile sharing with the group. It was just a few days ago, the U.S. Department of Homeland Security published guidelines for the coronavirus pandemic, and they actually listed blockchain managers in food and agriculture distribution as "quote unquote" critical infrastructure workers. So I thought that was quite interesting. But any other use cases where you think blockchain would be relevant, and any use cases for the technology companies that are listening in?
I think the one that springs to mind goes back to earlier part of the discussion, is really around forming new relationships, because that's what's going to happen as we come out of this crisis. New relationships need to be formed, and an example is the ability to have multi-sourcing strategies deployed, engaging new trading partners in different locations around the world. Underpinning that is going to be the need for digital identity. Companies today need to announce themselves to a global audience of customers, trading partners. They need to have identifiers that are uniquely set up to position them to engage in these new relationships and to participate in trade. And underpinning that will be very much a blockchain-based mechanism, whether it's using protocols that have been established like Sovereign, the identity schemes that you see in today being sponsored through R3, running on Corda, interoperability with other chains running on whether it's things Ethereum-based blockchains or Hyperledger. You're going to see a real push to establish these identity schemes, which will be interoperable and allowing companies to trade across boundaries seamlessly, to work with government agencies. So, for example, in Singapore, we have our network trade platform, traders connected on NTP, being able to trade openly with their counterparties across Southeast Asia and into the rest of Asia and Europe and the United States. So facilitating that will be very much a blockchain based. And I think, in many respects, looking at the work that R3 has been doing with the banks, with us, through consortia like Marco Polo, traded consortias, bringing banks and technology partners together, creates opportunities for the fintechs to be involved in that. And certainly in Singapore, I think, we have a very open approach to bringing fintechs into the payment space in MasterCard, and certainly within the financial services industry. Look at the events that we have in Singapore. FinTech Asia is probably the biggest event globally. And the kind of dynamism we see here is fantastic. So part of that, I think, is also for the fintechs, as they start to work with us, to start leveraging these partnerships, start working, with the likes of HSBC and ING and MasterCard and R3 to really, leverage the capabilities and the kinds of offerings that we can provide to get them onboarded, get them working for us, and get them, more importantly, working for the industry, working for the real areas of concern right now, which is how do we just get the SMEs back on track? How do we get these guys working again? And I think if the fintechs can start focusing on those, I think there's really two areas. One is the ability to manage the payment side, as we've said, and fintechs today are uniquely positioned, I think, to start developing a whole range of new digital payment solutions. Guys, if you're on the call, just look at the market caps of all the fintechs that focus on payments, and you'll see it's an area that does offer tremendous opportunity. Focus on innovation in that space, work with the community, work with the FIs, work with the payment providers like ourselves and Visa and others to help you establish the right protocols, to get proper standardization, to focus on rigorous data and security regimes. But also, what I also see in Singapore in terms of where the fintechs are going to play a major role is looking at even the most traditional kind of trade financing mechanisms we have, letters of credit, bank guarantees, import-export declarations. All of that traditional trade finance is really ripe now for streamlining. We've got some great examples in Singapore already. We've got a community that's been built up around, the network trade platform with vCargo Cloud driving this, the whole process around how do you apply for trade finance. We've got 9 local banks involved in that scheme. So this is creating, I think, opportunities for the fintechs to be very much involved in that and to drive these processes. And of course, with agencies, whether it's MAS or government agencies in around customs, driving these initiatives and sponsoring and providing the grants, I think we've got a great ecosystem to make this happen. So these are the kind of things that I think we need to be really focused on, where technology right now, it's kind of like a hammer looking for a nail. We've got the technology. I think right now the nails are becoming very apparent because of the issues that we have. And like David was saying, it's almost a catalytic effect right now. Change is constant, but becoming an imperative right now. So that's the opportunity. And I think the fintechs should really start to seize upon that.
Okay. I think that's a that's a good way to wrap up on the question. So thank you for your thoughts on that. I think we have a few minutes left, and I thought it'd be good for us to shift gears and move to the questions we have from the audience. So let me just read through some of the questions. We had one, how important is blockchain for COVID? So I think we talked about several examples there. There's a question around how, I know we spoke about it, how can blockchain help with conduct violation and fraud detection? So maybe, I don't know if Tony or David, you wanted to potentially answer that in a little more detail, potentially?
Sure, I'll take a stab at it because, the way we've looked at blockchain, it serves, quite a few different purposes. But one, I think, the proof of provenance, and I know MasterCard does some really good work around here, and an element around, material for an end product came from this particular supplier, then, having blockchain technology embedded in the value chain really helps and goes a long way to us being able to authenticate that this raw material did come from this particular supplier. So I think that element there is key, because there are different types of fraud, right? Whether it's, under contract, we search out one particular supplier and that particular person is not meant to subcontract this particular material sourcing, but they've done so. I like to think there are elements of blockchain technologies can be deployed to make sure there's no such non-compliance. The other element around where we're deploying blockchain, which is really, really important, is for our own KYC AML purposes, which is one of those things where everybody within the value chain, are they who they say they are, source of funds, modes of payment, settlements, that traceability is extremely important, not just all the other values around having pace and speed which we can settle with greater certainty and reconciliations off the back of that. So I think those are the things I would say how blockchain can be deployed.
I would echo that, David. I think you've touched on I think the key ones, particularly around provenance. I see that today as probably the single most important use case running on blockchain. But what I see emerging as well, and I think for any fintech listening today, understanding how the supply chain works and start thinking about what kinds of contracts are going to emerge. You're going to have a whole new industry creating, contracts, whether it's payment obligations or whether it's just forming contracts between buyers and sellers, taking traditional, constructs in the supply chain and building that into a blockchain scheme. An example that we talk about in MasterCard is the idea, essentially, of what we call the quantum supply chain, where you've got the right contracts in place for logistics, the right contracts in place for insurance and for the manufacturing side and the demand side. Blockchain plays a major role in ensuring those states are in the right kind of position to execute an order. Now, I think the fintechs, their ability to start looking at traditional supply chain practices and start to look at smart contracts, which really will drive some of the new kind of interactions between the various players in terms of the need to drive velocity and the need to drive out the onboarding, the KYC, the AML, the digital identity issues, all the way through to how actually the payment is done, and obviously well into things like settlement as well. So these are, I think, the most immediate opportunities, I think, for blockchain deployment in the supply chain.
Okay, thank you for that. So I think we have probably time for one more question. So I'm just looking through the list. How about, so there's one question. Can you ask the speakers to give specific examples of changes that organization has made to reduce human contact or to potentially go more digital? So uh, any maybe thoughts from David or Tony? Potentially blockchain ones if possible, but if not, that's okay as well.
I must confess, I think the pace with which a lot of these things have happened, as blockchain for implementation requires a bit of planning, testing, and then it goes live. Well, we've done it, like I mentioned earlier, with R3 Quarter, with a big commodities trader. Such things need a little bit of lead time, and unfortunately, we've not been able to go full tilt with something like this. But one thing's for sure, I think just the bank's own BCP arrangements, working from home, literally everything is digital. All our meetings internally are virtual, and I can see how this could become, a new normal for a lot of organizations. Not that every meeting has to be virtual, but where there's an ability to connect more seamlessly. I myself had just took part in a virtual offsite, over parts of 4 days, linking up with no less than 18 different sites across 15 countries and territories. I think with our customers, we see a lot of that happening. A lot of meetings that we're having with customers are also virtual, and an ability to transact, get electronic banking systems implemented, documentation signed and agreed. Most everything is going virtual. I think that goes a long way in helping our customers, adapt to what's happening around us today.
What an interesting point there. I think it made a point. You can't bring a trading floor into your home environment. I mean, there's physical issues about how many screens you can have, how much available bandwidth you have, and that's becoming an issue in some countries. I mean, certainly in the UK, because people are working from home, it's creating all kinds of issues in terms of access to systems, competing with the usual, Wi-Fi congestion issues you have in the home now, the number of connected devices. But what we've seen really in MasterCard just emerging in terms of behavior, obviously people are now at home, they are buying online. So we see a lot of card not present transactions through the system. So I think that the shift now is for example, the major retailers such as NTUC and Cold Storage really shift gears in terms of how they support things like home deliveries, building up capabilities in that space. We're seeing the need now to really bolster a lot of e-commerce sites in terms of just capacity to support, a huge increase in transactions coming from all of us that have to, basically work from home and in some locations have to order your food and all your essentials essentially online. Merchants we see in MasterCard today that traditionally, had a mixture of cash, contactless, and card, have really now shifted to contactless and card transactions. So again, on the merchant side of our business, we're seeing a major shift towards that because, in countries like in the Middle East, like in Iran, they've singled out currency as being one of the sources of transmission. So just taking physical cash out and start to push towards virtual or card-based transactions. So that's really again a major shift of behaviors, and this really happened only in the last 4 to 6 weeks, which is absolutely amazing.
Yeah, and I like to add, perhaps to sort of help wrap this up with a more positive note. It's been great to see how resilient the system has been. From a payments flow perspective, I know transactional settlements, be it for stock market trades and what have you, knock on wood, may it stay this way, but it's been really good to see, across the financial ecosystem, the system here has been really, really resilient and ready to serve our customers.
Okay. So I guess that's a good way to wrap up. So I think that really wraps the end of our webinar. So thank you again to David and Tony for your time. Derek, I just want to mention, Derek did send his apologies. He had some technical issues, so he wasn't able to join. But we hope that this was quite engaging for the audience. And again, just to reiterate, we have recorded this, so be sharing the links on our website very shortly. So thank you again, and have a good day. Stay safe. Bye-bye.